Thank you, Ms. Ime, for that introduction. This session is about agri-finance, and the theme for this session is funding the future, navigating agricultural finance for growth. We know that the landscape of agricultural finance offers a variety of opportunities for farmers and agribusinesses, from traditional bank loans to more flexible alternatives, as well as microfinance and cooperatives, each with its own unique benefits. I have on here my distinguished guests and panelists, Mrs. Ogogo Makinde, Mr. Henry, I beg your pardon, Shufowura, and Mr. Eze Nwakama. I'll give my distinguished panelists an opportunity to introduce themselves, which will be followed by a presentation by Mrs. Makinde, starting with Mrs. Makinde. Could you kindly unmute, please?
My apologies, I didn't realize I was muted. My name is Makinde. I'm a partner in Aluko and Oyibode. I head the business advisory practice of the firm, which provides advice to clients across all economic subsectors, which includes agriculture. I represent some of the biggest seeds companies in the world that have offices in Nigeria. I also advise social investors and financial institutions that provide funding to the sector. Thank you for having me.
Thank you. Mr. Henry Shufowura, could you kindly introduce yourself?
Amazing afternoon, everyone. Morning, everybody.
Great.
I'm Henry Shufowura, the Chief Operating Officer for Woodall Capital, an international advisory firm located in Lagos. I'm also a trade finance specialist with over 20 years of banking experience. We do international funding for a lot of corporates, banks, and sovereigns across Africa and within Nigeria as well. So that is a brief of my resume.
Thank you, sir. Thank you. Mr. Eze Nwakama, can you kindly introduce yourself briefly?
Good morning, everybody. Good morning, participants, and business day. My name is Eze Nwakama. I head agribusiness and export for Union Bank PLC. There are a lot of other things I do on the side too. I'm an SME finance specialist currently, and also a credit guarantee finance specialist for not just for the bank. My previous lives have been in credit guarantee and enhancing finance and flow of finance into agriculture and agribusiness. Currently, I head agribusiness and export for Union Bank. Thank you very much.
Thank you, sir. And now we'll take the presentation by Mrs. Makinde. You have the floor, please, Mrs. Makinde. Go ahead.
Thank you very much. I thought to set the tone for our panel, and it would be nice to prepare a few slides of where we are and historical and where we are on the agricultural space in Nigeria. So on the look at my first slide. Basically talking about the role that agriculture plays in the Nigerian economy. It's good that we have financial experts on the panel. So really, I'm speaking to the converted. We can all see the figures. It's a huge percentage of our GDP. A large amount of Nigerian workforce works in the agricultural sector, which is largely informal, and really that needs to change. So we can see that the sector witnessed the modest growth in Q2 of 2024, and we can see that even though that was a slight decrease from the same period in Q2 of 2023, Nigerian agricultural GDP is projected to reach 90 billion by 2026, and we all hope that the policies are put in place to ensure that this is not another hope day. In a 4-year window, we can see that the cumulative agricultural imports stood at well over 3.3 trillion naira, and that is the imports totally outpace our exports, which stand at a mere 803 billion within the same period. That needs to change. We have arable land. We have a large agricultural sector. Is the biggest sector. Is actually the biggest sector of our economy. So these figures need to change. The sector cannot. We all agree on the panel is key to reducing poverty and ensuring food security in Nigeria, and also, of course, increasing our currently a negative status in exports generally. Next slide, please. So we have had multiple government policies and initiatives in the agricultural sector from way when I was young. I mean, I didn't mention some of them from the past. It goes right back to the Operation Feed the Nation. I'm sure some people on the panel will remember that. So it's not for want of trying. Governments over time have tried to improve agricultural sector in Nigeria, and it is critical that there has to be new thinking and new strategies to ensure that this very critical sector grows. The allocation by the federal government in agriculture keeps increasing year on year on, and you can see some of the statistics that I have put on this slide. Now, just drilling down into some of the specific policies of government. This current government has brought in the zero duty and exemption. It is for a specific time period, just 6 months, and we think that it's really to ameliorate the current hardship that have been created by some economic changes in the last 8 to 10 months, and this will really help in reducing the increasing challenges around Nigerians being able to afford food. It is again the short-term strategy where we are all expecting that the longer-term strategies, which are in the following slides, start to turn the tide around as the time goes on. Next slide, please. The next two, the next three policies are more or less related. You have the agricultural production policy, which is aimed at helping Nigerian farmers access international markets. You have the Zero Reject Initiative. There is all kinds of urban myths and stories about how Nigerian food crops are rejected abroad because of farming practices, because of insecticide and pesticides, which a lot of Western governments put in their food cycle. So you have the Zero Reject Initiative to increase the acceptability of Nigerian agriculture internationally. We also have the Presidential Economic Diversification Initiative, which is to enhance our trade capacity in agriculture. And hopefully, when all of these come together, we are hoping on the consultancy side, which is where I stand, that they ultimately work as a whole towards improving our current challenging agricultural profile, as well as critically increasing exports so that we can improve balance of trade statistics. Next slide, please. More policies. We have the economic import promotion. I'm not going to draw a lot. Everybody knows about these policies. The CBN anchor borrows a program, the National Agricultural Development Fund. All of these are long-standing policies that predate this government, and we all have our views as to how efficient have been. Really, the core thing that I want to push through in my discussion today is the fact that we need new thinking, we need new strategies. We've tried a lot of policies and initiatives, and it doesn't seem that this nut is being cracked. And the result really is what we can see: more and more people falling into poverty and food insecurity, which is ideal. Next slide, please. Now we get into the challenges. I have a particular interest in this topic because I advise around different aspects of the agricultural chain in Nigeria, and we see some of the these challenges live. It is, for me, there's a disconnect between the fact that you have farmers in Nigeria sitting on large expanse of land, particularly in rural Nigeria. But the problem is these are also the poorest Nigerians. Owning land or access to land in everywhere across the world is a wealth, is a propeller of wealth, and it's also generational wealth. So we do need to in my view, totally retool our land tenure system. We have the Land Use Act. It's an act that's over, I think, 50 years now. Maybe it is time to start looking at that legislation and how to make it fit in Nigeria of today. We need to bring rural land into the formal sector. I think that I'm sure Mr. Wakama will speak to this when we do the questions. The fact is, banks need to feel comfortable lending to farmers across board, whether it's going to be banks like the big tier 1 banks or it's going to be at the micro level, the microfinance banks. The fact of the matter is, farmers need funding. There have been all types of initiatives to ensure that funding gets to farmers, but maybe it's the implementation or maybe it's the policy formulation. There's just always been a link on getting the funding where it is actually needed. We cannot continue to have a situation where large expanse of agricultural land in Nigeria still remain in the informal subsistence sector. And what that means is that you're just not going to get a lot of interest from the community. But the financial institutions, they want to fund based on documentation, based on data, and also to ensure that funds are protected. Then I also made some comments here on logistics. I think the logistics concerns are well known. We also have a problem with storage. How do you get from farm to market? There have been improvements. It's not all doom and gloom, but for the economy size that we have and for the population size that we have that is projected to keep growing, we need to be more strategic in ensuring that all of these moving parts come together and that there's proper funding. It's all well and good to have the government interventions from time to time, but we need to be strategic in ensuring that this sector has funding that it deserves. And that means setting in place strategies, policies, procedures, overhauling systems to ensure that it's not just a start and stop funding type situation as we've had for decades now, but it's something that is set in place and can just continue between farming and the funding community. Next slide, please.
Thank you. Thank you, Mrs. Makinde, for the data-driven insights. In the light of Nigeria's food insecurity and direct link to poverty, like, how do you think policies can policy reforms, and sustainable agricultural practices can be accelerated to enhance food production and reduce the impact of inflation to some extent on household food spending in the light of food insecurity?
I think there are short-term policies that could be in place, and we have seen some by the current administration. For instance, zero and the zero duty. That is a really fast-track policy to ensure that very quickly you are able to and at least ease the and also the affordability. But we need to go beyond the short-term policy process, and we need to actually be more strategic, and we need to look at the fundamentals. And I always go back to land ownership. I always go back to the fundamental for farming. How do we ensure that, for instance, the statistics show that most of our farming is still rural? It's driven by the rural communities. How do we ensure that the lands are brought into the small sector in a seamless and price effective manner, such that the farming communities in our rural areas are not discouraged, or we are not just talking over their heads? Sometimes does seem that the policies are done at the state government and also at the federal level, but drilling them down into the communities that are actually the farming communities is where sometimes you see the disconnect. So that's what I would say on the longer term strategy.
Thank you for that solid contribution. And, so the pertinent questions that, is always been asked with regards to agri-financing, Mr. Eze Iwakama, I'd like to direct this question to you. Can you, explain the different types of, financial financing options, available for agricultural ventures, especially for someone who's just starting out? We have, new agripreneurs. How do they go about accessing, capital? Because according to ResearchGate publication, many farmers still, remain challenged by access to capital and, for expansion and mechanization of farm processes. So can you just shed some light on financing options?
Thank you very much, Nike. And good morning. Good morning, everybody. You see, the topic of agri-finance and access to finance has been, we've dealt with this severally in different forms, in different aspects. I hope I'm audible enough. Can you hear me?
Perfectly. I can hear you perfectly. You're audible.
Okay, that's fine. So the issue with agri-finance, I think I want to break it down in about 3 compartments. One, there's a fresh person who is getting into business. 2, there's the person that is already in business that wants to expand or that wants to remain in business. And then 3, you have those that are structurally settled in the business and they need to scale what they're doing. Now, for the person who is just starting, unfortunately, you can financing from the formal sector, it's quite difficult. Banking, as you know, is quite regulated in the sense that we call it greenfields. So for greenfields, yes, the requirements for greenfields are not what the starter is going to be able to meet up with, their collateral requirements and all that. But if we put that aside, that's looking at the bank as the source of financing. But there are other traditional sources where you can actually get financing from. And mind you, financing for agribusiness varies. It's not just liquid cash that forms financing. You can also be financed by getting inputs. So you have aggregators, those that want to aggregate a particular crop. So you have areas like the areas that are endemic for either maize, like the Kaduna axis down to Niger. You can those in those areas, people in those areas that are interested in farming maize can actually be financed by aggregators who trade in maize, who give them the various inputs. But it's taken that land ownership is assured that you have the land in which you want to farm on. You can get inputs, and at the point of harvest, a netting off happens. And most of the netting off recent transactions that I've seen have been party to. You have the aggregator buying up the maize at current rates. Now, does that really raise money for the agripreneur? I have my doubts. I have my own belief. These are personal to me, so I don't think that that's the best way. But that's still a way to start. Now, you have the microfinance banks that are also into lending, and they lend on account of your activity in the trade arena. So you're either trading commodities or you're trading inputs. If you can choose to trade commodities or choose to trade inputs. So you have those that finance, but you must be present in a marketplace where there's an identity. You can be properly identified as a participant or a trader in this local market, and then you have the market union attesting that you are a player. That's another force. That's another source of financing. Now, a lot of the initiatives, like when Mrs. Ogogo was giving her breakdown, you could see a lot of the CBN intervention funds, which was actually where funding was easy for startups. But you are aware that there's development finance is, will I use the word shut down? But so far in this administration with the new central bank governor, there is not looking at development finance in the form of development finance as it was practiced before. So you have other areas. But technically speaking, if we agree that agriculture, if you check, sorry, before I even get to that agreement, if you check the contribution of agriculture according to National Bureau of Statistics, you could see, you confirm that the contribution by agriculture has dipped from what it was from 2022, 2023, then getting into 2024, you can see a dip. And this dip is not unrelated to the fact that funding is not going into that sector as much as it's supposed to go into for primary production. Well, when you say the growth that you see that NBS reports is actually the effect of the smallholder farmers who cultivate 1, 2, 3, 4, 5 hectares, and they are funded. The anchor borrower system had an issue. Yes, definitely there were flaws. The design was flawed. But I believe that those flaws could have actually been corrected so that we can see liquidity injection into primary production. That doesn't exist any longer. And with the runaway the naira struggling to catch breath against the dollar, we're an import-dependent country. Fertilizer production and all that inputs associated have also been impacted negatively. So those prices have also gone up significantly. So there could be production, but accelerant of production, fertilizer and inputs are not like we expected. So the harvest that it will have that is already started to happen, we can see that there's possibly a dip. And then insecurity has also reduced what is happening in agriculture, which is something that has to be tackled. So specifically speaking, and in financing, sourcing finance, the traditional financial institutions like the banks look at all these factors in deploying finance. So when the aggregate agreement is that banks don't want to finance agriculture, that they see it as being very risky, I've gone to outline the things that make it risky for banks to put money in agriculture. So I think that as a country that wants to impact and also drive down the cost of food inflation, there are prerequisites, there are things we need to look at to create an enabling environment for the farmer and the would-be farmer to go into agriculture. So I'll hold my peace here as we proceed, and then we'll take this more. Thank you.
Thank you for enlightening us on that discussion. And to you, Mr. Shofu Wura, with your expertise in navigating complex financial transactions and optimizing trade financing solutions, could you enlighten us on what types of investors are typically interested in funding agricultural ventures, and how agripreneurs can effectively pitch their ideas to them?
Thank you. Thank you, co-panelists as well. Well, from what Mr. Wakama also has mentioned, you will discover that agri-business is not any different from most of the businesses that we see, but particularly a lot of, when it comes to financing, you find out that people consider agri as a very risky business. And that's why you find out that they start and they can't finish. And looking into financing of trade, and when it comes to agriculture, it's always very important for agripreneurs to understand that at times they may have the skill in understanding the business, in doing agri-business and the likes of that. But when it comes to financing, we have to look beyond that. Yes, you understand soil management, you understand your cycle of harvest and production, but you got to also be able to prove to funders about your business skill, because these are very important. If you cannot demonstrate how repayment will be done, how you are going to meet up periods where your production cannot meet up with your the sales of your product in the market and the likes of that. So all these things are very important. So that is why it is important for agripreneurs to understand that you might be very good one aspect of the value chain. You should then look at people who are gifted to come into the business with you, so that it will help you in getting financing for that business, which is very, very important. So a lot of people just want to do it alone. Meaning they want to maximize profit that comes to that area, and they don't want to engage experts in that in business management that will help them in coordinating this, so that they can pitch appropriately, that can encourage financing to come into that area. And for people who are seeking financing in this regard, you have to do a lot of research, ask a lot of questions. Yes, young agripreneurs are looking for how they won't spend so much and how they can bring in people. Then you can look for venture capitalists who can also want to fund you, or look at grants that are available for your sectors also that you can use. These are opportunities, these are areas that are open to agripreneurs where they can have financing coming. But you must be able to prove and show records of, okay, in low season, this is what we can do. This is what your book is showing. I listened this morning to what the Royal Highness was talking about data. And most of the time, when it comes to financing, and you cannot support it with data, it is very difficult for you to get financing in those areas. So these are areas that are very challenging to agripreneurs, and they have to do better in these areas so that financing can be deployed in those areas. There's a lot of financing that can be applied through agricultural grants. A lot government is doing. Even 2 days ago, government talked about End from Soil. So a lot of things can be done to finance that transaction. So a lot of things, but they must be driven by you giving clear-cut understanding of how you want to manage this business going forward. Your low season throughout the cycle, we must understand when they're not going to be funding, where they're going to be funding, so we know how to finance you. And most financiers, those want to come in from beginning to the end, they want to see where is going to be a win-win for you, the business owner, as well as the funders themselves. So we got to be able to show that in our books, in our records. Your records must be clear, to show it clearly in areas where you want to be funded, as well as what do you want, what is the period, how long is this thing going to be for? You know, the traditional banking system cannot help in most of these areas. So you have to continue to look at cooperative societies and people who can come in to look at maybe equity contribution from other funders that can help support your business. Because some people just want to either giving you the money, or help you providing the seed or the things that you will need to support your agricultural business. Those are areas where you can pitch to get funders or financiers to come into to support your funding in that area. So those are the kind of areas that you have to look at. But when you want to take it beyond just within the capacity of what we can do within the country, and like Mr. Makama mentioned earlier, that you have an established agri-business that you now want to think about either exporting it or selling to other large corporate, then you have to look into a lot of other financing, like maybe pre-shipment financing, or exporting, those kind of financing you may require, working capital financing that may be needed in that area, or you just want to you want financing to come into your packaging to make sure that your product sells. So that will drive various kind of financier to you to see how they can support you, if you can provide show which area they want to fund your business. These are things that we have seen. I went to a friend's agri business, look into his business. He has all the equipment, he has all the ponds, but unfortunately, what was lacking in that business was the management skill to see how they can turn understand the market, who will need some of this information. They have the right equipment, they have the right pond, they have all the things that they need there, but they didn't do enough market research to be able to turn that into great profit for them. So they need good business management team to come into that system so that they can get the right funding to be able to maximize that project that they are running. So these are the areas I feel agripreneurs should pitch so that they can get funding to specific needs that will sustain their business. Thank you.
Thank you for that concrete discussion. And just a quick follow-up for you, Mr. Shifura. In your history of securing funding across sectors, can you give examples of successful agricultural ventures that have secured funding? And if Mr. Nwakama has an answer to this, he can also respond. In your history of securing funding, are there do you have examples of successful agricultural ventures?
Well, most of the time, my area of that I've seen for agri, I've only read about ventures in Ghana and Kenya that have secure funding, that have been supported and secure funding for their produce. But mostly in Nigeria, maybe which is what we are trying to do now, is to see how a lot of supply chain finance can come into this area. This is what we are pushing in the industry right now, to say, okay, supply chain finance can be used more, but a lot of supply chain that have been used is not in the area of agribusiness. They have been in other areas. So, but in other part of Africa, we have seen this being applied in Ghana and in Kenya, which I have read about, but I have not actually been able to fund anyone directly or seen anyone where they have done the agri-business being funded, apart from those who are into other area that is not agribusiness.
Thank you.
Okay. To weigh in this, yes. Sometime last year, I know that Afex Commodities received some huge funding. I didn't say we were involved. I'm trying to tell you that some agribusiness companies have also received this funding. And like Mr. Henry talked about structuring is key, because everywhere, anybody that wants to invest money or put in money, there's let me use a literal explanation. And I like using this kitchen explanation to explain it. You see, most financiers, be it a bank or an individual, they are like the practical thieves. Before a thief goes into an environment to steal, he must have surveyed the place and he has plotted his routes of escape, how he will escape. So the financier thinks in that same manner. I'm going into this transaction. What are my ways or my options out of this transaction? How will I get my money back, and how will I, exit the relationship? If there is no clear cut, there is no clear path of exit, money will not go into that transaction. Because what everybody wants to see is a situation where I put in X and I'm getting X plus something that takes care of my cost of fund and takes care of my cost. So for transactions, for people that have received agribusinesses that have received money in Nigeria, they exist in Nigeria. I mentioned FX. I'm also aware that some other blockchain players have also received monies for primary production purposes. And in terms of what we do in banking, just like I explained earlier on, we also have the same lens. That's how we view it. And we look for the way out. So in terms of expansions, in terms of working capitals, I can reel out names of customers, which I know for issues of confidentiality, I will not be able to reel out names of transactions that I have dealt with. But I can assure you that with the kind of portfolio that we have in Union Bank, we've dealt with a lot of companies that are doing expansion, providing working capitals for them. But these are all transactions that you have a clear path. We're talking of the startup here. So for the startup, Nigeria, like every other development country, needs developmental finance that comes in either as grants in some areas and those grants with willing partners like the bank, like Union Bank, for instance, where you can have a kind of blended finance that drives down the cost of funding for those things. Those exist too and are options that are available. But in terms of accessing money, yes, a lot of companies have accessed money in Nigeria for agribusiness. Thank you.
Thank you. My question to Mrs. Makinde, how can agripreneurs stay informed about new funding opportunities or changes in financial regulations that could, impact their agricultural businesses?
I think that there is a lot of information out there, financing natural agencies, and those are actually accessible by the or I like the word we say, agripreneurs who are savvy enough to access this type of information. If I go back to what Mr. Eziwakama had said just a few seconds ago, there's a lot of funding, but it is into, I would say, I don't have the statistics. I would guess less than 5% of our farming sector need. So how do we deepen the access to? How do we bring more people into that subsector? How do we bring the smaller holders?
Mrs. Makinde, if you can hear me, I think we've lost you. Okay, well, let her come back to that question. In the meantime, still on, finding the right financial partners. Mr. Shofora, can you shed some light on how entrepreneurs, agripreneurs can identify and build relationships with the right financial partners, and tips for negotiating, favorable terms and conditions with financial partners or lenders?
Thank you. Most of the time, it's important that you also tailor your pitch or your team to the interest of the partner, whoever you want to fund you. Maybe banks, maybe investors, maybe impact investors, and then you also need to have a business plan, that can show to that effect. Because if you want me to really be have a relationship in that agribusiness, then you highlight to me, if I'm a bank, for example, I'll be looking at what's your financial stability, your payment plan, what has your loan portfolio been before. And if I'm an investor, I want to look at other areas like, what is the probability that if I get involved in this, your business, it will take us further. It will grow at what rate potentially. And investors want to see the business model that you have, so that it can provide you, that it can provide them the kind of returns that they are envisaging. So these are the things that will give you good relationship with any financier. And you can also just have your market analysis to show that you understand the agricultural markets, the trends and competition in the market, and you can kindly explain how you make money over time with them, especially since it's a cyclical business that you are doing. All these are important, and you can then show your financial projections so that to them. And this also comes with you demonstrating transparency, professionalism in this area. Then you engage in continuous communication, which is very important. You don't wait. What we have seen is that we always wait till when we need that partnership. We can engage long before, be asking questions concerning maybe you want to change products or from what you have been involved in before, you can get a financial advice from an advisory firm or from a bank, anything that you need to do to just make sure that when the time is ready and you need to form that partnership, they'll be there with you. They'll understand your business for a while now. So it's easier for you to come into that. So continuous engagement and communication is very important. So understanding your financial leverage is key. Then you have to be sure that you have to demonstrate that you have done your own work. You know this terrain. A lot of this is very important. Then you know the season that you will be down, the season that you'll be up, and you can show that to them. This will help for you to have good, favorable relationship with any of the financial partners that you have chosen, either venture capitalists, either banks, or either impact investors, like they call them, who are just want to make a lot of impact by being part of the agricultural business. So these are the things that will create good partnership in this regard.
Yeah, thank you. So a quick follow-up question from...
I do apologize. I'm so sorry. We had a system outage here. I now have to join with my phone. I do apologize. I just got cut off.
Oh, that's fine. You're welcome back, ma'am. Yes. So Ms. Shafura, so just to align with the discussion on investor, there's a question here in the Q&A session talking about funding. So the question goes, is there a means to access funding without interest for agri-business in banks? And this person is an angel investor and wants to know what other types of grants are available excluding banks, and what is the best for intending individuals willing to tap into the agriculture business as an angel investor? Grants like angel investors, rather.
Yeah, I think there are quite a lot of grants. Some of them were highlighted when Mrs. Makinde was speaking, and Mr. Eze also mentioned some. We have Accelerated Agricultural Development Scheme, we have Commercial Agriculture Credit Scheme, we have the Paddy Agriculture Scheme. We have quite a number of schemes that they can angel investors can also look at, because the truth is that except you have an agri desk or an agri business desk in a commercial bank, it is very, very difficult that you said you want to get involved without any interest. Bank is not an NGO. So if you get a bank involved in that, element of interest definitely will going to come, because it costs money to get those money. So they're going to apply that to you. So some banks have dedicated desks in that regard, and some financiers also have access to cheaper loans or cheaper funding. Because don't forget, some banks are driving the SDG goals. So as a result, you can have some funds, so some grants allocated to that. IFAD is doing some things in that regard. They were able to support a lot of people during the COVID, So angel investor can look at all these kind of schemes that are available across, even today, we have a lot of them on digital platforms. Quite a lot of them. The FX that Mr. Eze mentioned is one of the private sector driven digital platform that is really doing very well right now. So these are areas where angel investors can look at, and they can also, there is farm crowding that is also available. There is Hello Tractor, that for those who just want to be involved in tractors for the farmers. There is Trade Boozer. There are quite a number of them that an angel investor, what we need to do is research on some of these things and look into government, maybe Ministry of Agriculture and other government agencies that are driving agricultural businesses in Nigeria, and you can get a lot of them. And you can even talk to private sector investors. All these are things that are possible that angel investors can look at. Thank you.
Thank you. Mrs. Makinde, if I could beam back the light to you. Are you there? You were, I think, wrapping up your...
Yes, I'm here.
Okay, yes. So you were wrapping up your conversation about building relationships with the right financial partners before you were thrown out. Could you just wrap that up?
I could. Thank you very much for that, and I apologize again. But what I wanted to highlight is the fact that there is a lot of information out there. We need to democratize the access to the information. Sometimes we tend to find that the people who need the information most, for instance, your farmers in the rural areas, are unable to get the information that is required. We talked a lot about the funding opportunities. I represent clients who are in the social investment space, who provide funding that are much more attractive, even much more attractive than the microfinance banks or your bigger banks will provide. And it's patient capital, is either equity or soft loans that they use to drive agricultural development across Africa. I think that we need to devolve access to information. Yes, the online space is good, but sometimes there's an educational part to getting information online. Maybe also at local government level, governmental offices. There has and also communicating the information in different languages as well, so that there's more access and inclusivity. And this would help farmers in getting the information that they need. Also in the educational as well, how to have better farming implements, better farming practices, and all of that to increase yield. So the help that is needed, or the help that's available, is not just on funding. There's funding help, but there's also operational day-to-day learning and expertise that's available.
Thank you for excellently wrapping that up, Mrs. Makinde. Mr. Onwakama, there are a couple of questions. I'm actually going to go right into the Q&A because it's weaving into our conversation. So I think it'll be ideal to direct some of these questions in the Q&A. So someone has asked, what are the success factors, supporting youth who are interested in the value chain development in Nigeria and Africa in general? The success factors in supporting. I think the person is trying to ask what financial success factors are in place. So,
can you hear me now?
Oh, yes, I can hear you.
Okay. So the critical success factors for accessing finance, I will list some of them. Number one, just like Mr. Henry talked about when he did his presentation, has to do with education, understanding what you're doing, and then record keeping. Record keeping. So when I look at your business, I'm able to see collections. I'm able to see those collections translate into your annual turnover, which speaks to the volume of business that you're doing with respect to the kind of money you're looking for. So what you have most times is that, and to be fair to everybody who is passionate about agriculture, the passion, if you want to fund your passion, you can fund passion easier with your money or from friends and family. But when you're talking about taking a commercial loan, it goes beyond passion. The passion is part of the things that will help you access the funding. But the structuring of the business, one, understanding the dynamics and the interplays in whatever value chain that you're playing in is key. Now, having what I call critical enablers within the value chain. So let me give you a typical example. You're into fish production, you have a fish farm, and you have a fish feed seller that gives you credit, and you have it documented that when you carry 10 bags of feed, by the next 1 week, you make payment back on account of the sales that you have made. And when you sell, you document the date and you have the sales proceeds. I look at your bank account, I can see those sales proceeds. Those things will give the sense of a business that is structured and a business that is ready for finance. But what I have seen with small businesses, it's the proprietor cannot distinguish between his personal money and the business money. I call it back pocket accounting. So the money comes in, you use that money to do other things. The business is neglected and you're looking for money again. Such will not really endear financiers to advance money to you. So the critical success factors, like I said, a structure around your business, an understanding of the environment in which you play. You have enablers. So you have feed dealers who supply you feed as record, so that if I'm giving you money, I don't necessarily have to put the cash in your hands. I can actually pay directly to the feed miller to supply feed to you. I understand your market, access to market, which is key because it's the market that should actually kickstart and accelerate production. So I can see the linkages from the whole end of the value chain, the production, the transportation and logistics to the marketplace, and I can see the money circling back into your account. Those are the critical factors that support. Now, people will say, well, I didn't mention collateral. Yes, some transactions are transaction-based. So when those transactions are seen, a bank can look at it and decide to ring-fence its collections and know that this ring-fencing will give me my repayment. That can lessen the collateral burden, where we can leverage other entities like the credit guarantee institutions to, give us the collateral that is required, or the cover that allows us to meet the central bank regulation on collaterals. So all these things, all these things are interplays, but primarily that business must be structured enough to answer the various questions that have to do with a structure around the business. Thank you.
If I could just add to that briefly, just allow.
Yes, please go ahead.
I wanted to add that that's an excellent response, and we are also aware of industry and sector groups that assist with these types of training. For instance, I am part of a group where we do a series that says be funding ready or investor ready, and really it's all data driven. So you keep all your records, your business records. You're learning how to separate your personal expenditure from your business expenditure, and also just be able to keep records to show a profile of the expenses, the incomings and the outgoings for the business. This will be used for farmers as well, joining such groups, getting such information and the training, because it is a business. If you want funding, you need to run your operation like a proper business, and data on all the records need to be kept properly. So these are support type training and facilities that can be available as well for farmers.
Fantastic. Thank you for sharing the matrix that agripreneurs need to track for a successful, financing in the agricultural sector. And in terms of capacity building, I think there's a gap that exists in terms of educating people. I think the question just disappeared. So basically sensitizing agripreneurs, about securing funding. Is there any form of, capacity building that exists that people can obtain knowledge from, especially with financial institutions? Do they offer any of such? This is directed to anybody. Yeah.
Okay, so so financial institutions, the way they are structured actually is not to go about carrying out trainings, but what we do is we identify some agencies and some bodies that want, to build capacity in a particular area, depending on, so if I choose a value chain I want to play in, let's take aquaculture, let's take poultry, for instance, I can work with people that do capacity building in those areas and organize those as part of our CSR in those areas. And we've done a few like that, but it's not actually where you will expect. It's not the banks that will provide those trainings ab initio. There are other agencies, other bodies whose core remit is actually to do capacity building, just like Mrs. Ogogo talked about. So those agencies, some of them also come to banks and say, we want to do this training. Can we have your customers on your database to do, to work on? We are very open to those partnerships. But like I said, it's not the core remit of what a bank does. So that training and being in the forefront is not core. So I might have it in my KPI to do one of those trainings, to do those trainings once in a year. And that's just it for me as a bank.
Okay, I don't know if I could add to that.
Yes,
Okay, just based on what Mr. Eze said and which is marketing, it is, for you to do some level of human capital development in those kind of area, or trying to give them more information or educate them more information. If I'm into agri-business as a bank, what we used to do is important, is that you do like a customer forum for those particular set of people. When you now aggregate whatever their needs are, then you can get stakeholders in that regard to now give them enough information and education so that they can understand how to go about their business in a way that will be profitable. So those are the kind of things that, and a lot of banks get involved in it, just like Mr. Eze said, instead of their CSR, just wants, okay, let me put regulator here, let me put the agripreneur people here, let me bring angel investors into the room, and let's talk about this thing. So when we talk about it, then we now see areas where they are deficient. Once they are now deficient in those areas, they now know, okay, this way, so that it can be a win-win for all of us. So I now begin to see what they will require. Then we can then bring something together that will benefit all of us. I may not be able to even provide all the money that they need, but I can bring other financiers on board, and this can help in a lot of different ways that can support their business. These are subtle areas that financiers, financial partners can come in and make sure that they help them in growing the business. But most of the time, you see that you want to do some of these things with established agri-businesses, not for young agripreneurs or those who are just starting up. That will not be an area where banks want to put their muscles, because they have short-term funding and they want to turn it around quickly as well. So, and when it comes to agribusiness, it may take 3 to 5 years or more for you to begin to see some growth in that particular area. And investors are looking for scalability, they are looking for growth, they are looking for advancement, and these are the areas that will be of challenge if you have to do that with young businesses in the area of agribusiness. Thank you.
Fantastic, thank you.
If I may add,
sorry, go
I
ahead.
wanted to say that there are also agencies, some multilaterals and some bodies that actually provide training. So apart from the funding, particularly for the new entrant, there are seeds companies operating in Nigeria who provide you with advice on how to store seeds, when to plant, the best soil conditions, and all of that. And those are useful information for farmers for increasing their yield, quite apart from the financing side of things. And there are also these social investors that I had mentioned earlier, who also are able to provide training, farming implements, and how to improve yields. I think this is an area where particularly the local governments can really play, because sometimes the training is expensive. Sometimes we join these trainings, and when we are acting as facilitators to advise on issues, and it's free. But setting up training can be expensive, can spend some money, and this is where governments can come in providing the facility, providing the space to bring in, particularly your small-time farmers or your startup farmers, to come together, get the knowledge that they need. So, expecting the financial institutions to play that's just not what they are set up to do. But governments can actually play in here, and I would say at the local government level, and be providing these types of facilitation.
Thank you, Mrs. McKinney, for that contribution. So I see a couple of questions here about people with special needs and disabilities, and some of the questions being asked: are there any special programs for people with disabilities who want to, tap into the agricultural space, and how is, funding made easy for them? Mr. Nwakama, and could you please respond to that?
So, like I said earlier on, I don't want to be misunderstood. I don't want my answer to be misconstrued. I just want to say it as it is. So within the banking sector, we're agnostic of disabilities. What the banks look at is the financials behind what you're doing. You understand? So when you're now looking at special considerations, that's where my talk about development finance comes in. These are responsibilities that the government should carry. These are also engagements that, just like Mr. Makinde said, at the local government level, where the effect of governance should be felt by people in the grassroots. These are initiatives. And I know that in some states, the first ladies of some states have initiatives that address this. With respect to regular access to finance, unfortunately, it does not see that divide. What it sees is the financials behind what you're doing. I have a customer who also is challenged, but he's running a business. And when we discuss, what happens is that you look at so there's this product that looks at maybe a 1% or 1.5% interest cut for such people as a reward for putting in effort against the physical challenge that they have. So this happens, but is it for people who are just starting up? That was why I was talking about the effect on the role of government. Government is actually for public good versus the enterprises or the businesses that are there as, profit driven. But the CSR initiative of profit-driven organizations, mind you, cannot serve the multitude of people that have these challenges. So while the CSR exists, it might not really solve the problem of everybody that have that challenge. So there has to be a concerted effort. There has to be a concerted effort. I think the bill on disability was passed, and there are supposed to be that special consideration in terms of development finance, where you make funds available for the use of people that have, people living with disabilities. So for the banks, it's one or two, is not significant. It cannot make the kind of impact we are looking for, but it does exist. That's the best way I can try to put it. It's not something that will give you the hope that every bank has something. Banks have something, but you also know that the engagement within the year lists out the umbrellas that accommodate the people living with disabilities that you deal with. So it could be I'm just giving this instance, I'm just telling you it could be maybe Pacelli School of the Blind. You do something for Pacelli School of the Blind that goes to that. But when you're looking at businesses, as at today, the banking, the regulations, the new interest rates, the CBN tightening rates because of inflation, jobbing to curb money in the system that is driving inflation, it has actually affected the interest rates. So you don't find someone asks about single digit loans. I don't know when single digit loans existed in Nigeria since the current CBN, because all those things have actually been phased out. And when you look at it, they are not phased out because the government does not like Nigerians. They are phased out because of the effect it has on the money in circulation. So most times you find that single digits distort the system. But if you're going to put it in infrastructural development so that a lot of people can plug into that infrastructure and drive their businesses, then you will see that the gains from single digits can come in. I've been of the school of thought, this is a personal view, and I think that at some point, when CBN visits it, I will suggest that if you look at banks that are willing to fund agriculture, so Union Bank today is known for funding agriculture. That's not because I work with Union Bank, but as a statement of fact. If you look at such banks and you say to drive development of agriculture and to increase food production, instead of giving you the regular cash reserve ratio or the liquidity ratio that is required, I'm going to give you maybe 500 basis points less what other people are doing. But the effect I want is that you must divert this lever I've given you to funding either primary production or to funding logistics or to funding post-harvest loss, so that at the end of within a review session, either quarterly or half yearly, you look at how much money was this directive, how much money did you make available? How did you deploy the funding? If you deploy the funding into funding trade, I will slam you a penalty that will take all the profit you made from that money. But if you deploy the money into funding primary production, maybe logistics or what other value chain that has been identified, then that's good. That's good. To me, I think it's good monetary policy when you're targeting a particular area to drive a development. So that's the suggestion I will have to the policymakers, that this can actually happen. Instead of having a blanket thing that allows the level of I don't know the level of constriction you have within the system today. So if you look at the deliberate average cost of funding today, and then giving loans to agribusinesses at those interest rates, I don't know what's going to happen. I don't want to be a prophet of doom. I'm not a prophet of doom. I believe that we can actually work smartly towards achieving what we want to achieve, and then have the expectations put rightly, and then you have the banks responding positively and driving mainstreaming funds into a sector that food security and national security are intertwined. You can't remove that. So I think that there has to be something that is consciously done to drive deliberate access of funds into agribusiness. Thank you.
Thank you for the compelling insights. And I think it will also it'll be good for the attendees to also note that the organizers, the British American Tobacco Nigeria Foundation, also actually provide funding to young agripreneurs. And for more information, they can actually go to the BATN Foundation to access more information about that. So in closing, just give our panelists
just to mention something that is very also important. It may not be very, just like BOA is doing, or what Nigerian British Chambers of Commerce are doing. What is important also is that when we do a lot of research, they are not so common. We have impact investors who are basically just focusing on funding with social and environmental goals in mind. They can support people who are not able in terms of their disability in doing agribusiness. So, but this is not very common because their focus on, because the agenda is to focus on rural development, sustainable agriculture, poverty alleviation or poverty reduction. So that can come into that category, but all has to be done into researching them. Just like Mr. Eze said, these are projects for developmental financial institutions that can go from governmental agencies down to the local government. But in the part of that, there are still private impact investors that can take on these social, environmental support that will help such businesses. So these are people that they are not common, but they are available through research, through getting information from necessary government agencies that we can leverage on, they just want to support agribusiness for social and environmental impact, alleviate poverty, and also support those who are in such business because they are not, there is an unusual position. So these are possibilities in the ecosystem that can be explored as well.
Thank you for that wealth of information. As we tidy up and wrap up of this session, I would like to just pose this final question across across board. If in 1 minute, please, if we can all just quickly summarize this. If you can just also share one key lesson about agri-finance that would be inspiring to our entrepreneurs, what would that be? Starting with Mrs. Makinde, are you there? Okay.
Yes, I'm here.
All right. Yes. So in closing, can you just share one key lesson about agri-finance that can inspire our agripreneurs?
I think the one inspiring message I will have is that there's a lot of help available. There are challenges, but there's a lot of help available, both institutional, financial, and governmental. So really, if you're interested in the sector, you need to get involved, get educated and get information. There's information out there. It's not coordinated, but it's available. Get the necessary advice that you need because help is available. Thank you.
Thank you. Mr. Shofowora, can you just share your...
In 1 minute,
less than 1 minute, actually.
One key lesson from experience is that I understand that cash flow is king. Cash flow is king, Cash flow management is vital in agriculture and any other business. Many agricultural ventures fail, not because they lack profitability, but due to poor cash flow management. That is very important. Then I encourage young people or people who are just starting into agribusiness, you have to start small and in bits. You don't need the major capital expense. Start in bits, and that will help you to do better in every area of the business. But cash flow is king. And also master financial literacy early. That will help your finance, your financial relationship with key investors. Master financial literacy early, then diversify your revenue. Don't rely on single crop or agricultural product, because if it is just single crop, whoever is doing anything in Maduguri or Bono, everything is gone. It's gone. You may never get back. So you got to learn to diversify. And finally, research funding option. Thank you.
Thank you so much. Mr. Nwakama, can you please share your own 2 cents in 30 seconds?
So mine, I'm dividing it into 2. The first part is let us know that agribusiness grows. Agribusiness is not that big bang. It's not that one silver bullet that solves all your problems. So just like Mr. Shofowora said, start small and consistency and consistently grow your business. My other thought goes to government. You see, in all we have said, we have been very fair to government, and I'm calling on government. You see, Bank of Agriculture exists for a purpose. Now, Bank of Agriculture, where is Bank of Agriculture in Nigeria today? Government should take this as a wake-up call. We have the young men and women who are willing to do things and add value, who are willing to stop being, asking for handouts. We need a viral and active Bank of Agriculture in Nigeria to drive on this other side, so that so there can be a meeting point and we achieve results. The population growth in Nigeria cannot support what we are currently doing. There has to be concerted and real effort to drive the use of Bank of Agriculture to develop agriculture and agribusiness in Nigeria. Thank you.
Thank you so much, distinguished panelists, Mrs. Makinde, Mr. Shofowora, Mr. Nwakama, for this thought-provoking, dynamic, and informative session. I'm sure our attendees glean with so much delight with the wealth of information. I'm very grateful for this session. Thank you, and have a fantastic rest of the day. And before our next session, there will be a quiz. So thank you, panelists. Our session is done here for now.
Thank you, Mr. Eze, for meeting you. Thank you.
Thank you, Mr. Eze. Thank you, Mr. Shufura. Yes,
Thank you, everybody. Yeah, thank you.
yes. So there'll be a quiz before we commence the next session, and there'll be an opportunity to win a 30 minutes time with the panelists of your choice. So please stay tuned for the quiz before we commence the next session to the attendees. Thank you.